Imagine walking into a restaurant and finding not one, but two of your favorite brands under one roof. Now, how would that change your dining experience? Now, today we're diving into the world of dual branded restaurants, a game-changing strategy that's reshaping the industry, creating new opportunities for franchisees, and revolutionizing the way we think about dining out.
Welcome to Fordify Live with your host, Ford Saeks.
Now, my guest today is Scott Gladstone. He's the Chief Development Officer and International President of Dine Brands, the powerhouse behind Applebee's, IHOP, and Fuzzy's Taco Shop. Now, Scott is leading the charge in strategic expansion, in multi-brand growth, and innovative franchise development. So, Scott, welcome to the show. But with the big picture here, what exactly is dual branded and why is it such a game changer?
Well, first, Ford, thank you for having me. It's a privilege and an honor to be here. And thank you for that introduction. That was fantastic. And I am even more energized than I was before about dual brands. So yeah, the dual brands are our most recent innovation here at Dine. I'll get into what it is, but give a little bit of context before. We've opened about 20 of these units internationally. We opened our first dual branded location in Seguin, Texas last week, the 14th of February. So what is it? So we have Applebee's and IHOP, two iconic legacy brands, category leaders here in the US, where we've put them under one roof, as you mentioned. If you're a guest, you walk in and there's distinct dining areas and I'll call them hallmark equities of the brands within the front of house, dining room. So, for example, you're going to see the Applebee's bar and a bar area. You're going to see an IHOP dining area. But in the back of house, you've got a shared kitchen, cross-trained staff, and effectively working everything on one line. So from a consumer perspective, you get the best of both worlds, which is proven to be something that's very interesting to the consumer. And for the operator, you get a lot of efficiency. So you get efficiency of all your fixed costs. You have an existing building. It has rent. It has electricity. It has other fixed costs related to it that you're able to leverage now with a higher sales base. You get leverage out of your labor, especially all of your variable labor. So it's a compelling proposition for potential franchisees, and we're really excited about it.
And so the franchisee then is like a multi-brand owner in a sense, right? So it's one staff that's managing both brands at the time. So if you have an Applebee's and an IHOP, it's one staff, one back house, but two different experiences in the front.
That's right. So for the consumer, you get the best of both worlds, and we've adjusted the menu so that it's very efficient and featuring the kind of highest velocity items of both. So where you have in a standalone Applebee's or standalone IHOP, call it between 100 and 120 menu items for each menu. In this dual branded unit, you also have 110 menu items. So it's not double the size. So you get a lot of efficiency and you're able to service it with your existing staff. The concept of this is not maybe too different, at the highest level. There's many other concepts that have attempted this, and you're seeing a lot of it within our category today, especially in an environment of rising rents and rising costs in general. We think that what makes us uniquely Dine is that we have these two, again, category leaders that are so distinct in their day parts. So whereas a lot of other concepts or franchisors have tried to put two brands together, the volumes are generally at the same time, right, of those concepts, or they're probably lunch and dinner type concepts. Here, we've got a breakfast leader where most of the volume for IHOP, comes before noon, and then it tapers off throughout the day until we do have a strong late night business. Then you're able to supplement that with Applebee's. So from a volume perspective, it actually smooths everything out, which and then it gives us 3 full day parts.
Well, that makes so much sense because I have seen other brands do this. I did at the time, even though I've been in franchising for 34 years, I'm like, why is there a XYZ and an XYZ in the same building? I'm like, who owns the building? And because I've seen it. I mean, I'm in Wichita, Kansas, and literally 3 blocks from me, there's 2 different brands that are doing that now. I'm seeing that a lot more. And I think that again, what's really nice about what Dine Brands is doing is they're reacting to giving the consumer a great customer experience, because at the end of the day, that's really what it's about. So not only are you providing a great customer experience, but you're also offering the franchisees a way to really maximize their investment as a franchisee to help serve the community, build relationships, and offer more broad, if that's the right word, more broad spectrum of choices.
Yeah, we think it's really an attractive proposition for the franchisee. It solves potentially, again, we're very early in this journey, but solves some potential issues. You have again, in this environment of rising cost and rising real estate costs. So we're trying to add top line. We're trying to add flow through for our franchisees. This gives them a very clear option to do that. And on our side, we're trying to be flexible, and I think we've done a good job of saying there's kind of no sacred cows as it relates to our brands and the way that we do things. We're going to think of doing it a little bit differently. So just an example would be the SOPs in the back of house or in the front of house, right? Is it they're different for Applebee's and IHOP, and so we had to go and realign to what is the standard greeting for a table, right? It's not the way we do it in IHOP. So you kind of have to leave some of that behind. And there's different, just ways in which you prepare the food. It gets to the very kind of minuscule thing. You're talking about serving sizes. You're talking about everything. So we've had to redo it. We never said, okay, it has to be this way or it has to be this way. We came up with a new way of doing it. So we think it's going to work, and we're excited.
Well, I think it's really important to have that as an opportunity. So it's also possible that an existing franchise, so everybody on the planet, I mean, unless you've been living on the rock, they know about Applebee's, they know about IHOP, and they know about Fuzzy's Tacos. So what I think is really interesting is that if I was, say, an Applebee's franchise, and maybe my sales are down and my market, and there's a lot of increased competition, by converting. So this is more of a question for you. Can existing franchisees then submit to be considered for a dual brand, or is it more just new ones that you're looking at that are going into new territories and new areas?
Yeah, it's a little bit of both. And again, that's where it solves, a couple of different problems or opportunities. The opportunity for greenfield development or new markets, that's very clear. So we can potentially take this into a more rural market where you might not have forecasted the sales to be for a single brand to justify the investment. Or you might be able to take into a high density urban market where the rents are incredibly high. So it kind of can solve either one of those opportunities for new store growth. But yes, on the existing stores, that's where this is, again, not a silver bullet, but a nice opportunity to leverage your existing fixed cost base. So the first restaurant that we opened, again, in Seguin, Texas, that was an existing IHOP. It had been an IHOP that we then did the conversion to add the Applebee's, which is, again, proving to be, very early on, a very compelling proposition, both for the franchisee and also for a community that, was probably looking for more options, as related to their dining set. So, again, it can be deployed in multiple different ways. Hypothetically, that's what we're now, in the execution phase of saying, okay, we've put the first one out there. We're encouraged by the early results. Got a lot of interest from our franchisees because they've had an opportunity now to see it live, and we're going to work through the complexities of the development process to see how much we can get done. So the hypothetical in development, it's so execution focused. So there's the strategy and the concepts, but then it's okay. Can you actually make this come to life in the existing box you have? And we have a variety of footprints and capacities and square footage and the plumbing and everything that's set up in a certain way. Can you actually implement this? And that's where our architecture and design and field construction teams come in to work hand in hand with our franchisees and try to make this concept come to life.
Well, that makes so much sense. Now, for those of you tuning in, we're live right now on Facebook, LinkedIn, and YouTube, and a few other places. And the audio of this episode becomes an episode of the podcast, the Business Growth Show podcast. So you're listening to Scott Gladstone. He's the Chief Development Officer and President International of Dine Brands, which, of course, we've been talking about Applebee's, IHOP, and Fuzzy's Tacos. Okay, so I'm going to detour for a second, then we're going to come back to the dual brand thing. Tell me about your journey into franchising. So how did you how did you end up in the role that you're in now? And what were some things you learned along the way?
I don't know. Do you ever sit in a room and say, how did I get here? You kind of look and
I get that question when I'm on podcasts. People say, what was the one thing you wish you would have known when you started out? And I'm like, hell, I don't know. I failed more. I probably would say fail fast, recover, forget the mistake, learn the lesson, and always be a continual learner is what I say. But I'm just curious, like what was your history before Dine Brands? I mean, for our listeners, just to kind of give some perspective into what you're doing.
Yeah, nothing is, I guess, I was kind of poking at you, but nothing's linear, right? You experience different things and you end up in it. So my first, the beginning of my career was in financial services. I actually started my career at a company called Bear Stearns in New York, and I was there in the financial crisis. So that was my early exposure experience in the corporate world, which we could probably spend
that's a whole episode itself,
talking about that and what that was like. But it was very formative, I guess, would be the long and short of it. After that, I went back to business school, and then I came out. I was in management consulting for about 5 years with Boston Consulting Group. Had the opportunity to work across a bunch of different industries and functions. Learned a ton, built the general management toolkit, and then I joined Dine Brands in 2016. So it's been about 9 years, coming up on my 9-year anniversary here. And at Dine, I've had the opportunity to be in a bunch of different roles. Thank you.
You're welcome.
That's the confetti. Bunch of different roles here. So I've spent about 4 years in the Applebee's business unit. It was more of a line leadership type role at the franchise level. I led our off-premise business. I led development, led consumer insights, for a time. And then the past 4 years, I've been at the Dine enterprise level. Currently, again, president of international for the last 2 years, and then chief development officer last year. The chief development officer role was new, and so we're still building this team. We could talk about structure and how to be effective as development organization, but we saw that opportunity because we had development within each of the 3 business units at Dine, and we decided to consolidate that under one function and one leader. So we've been building the team out, and I think the dual brand is the first of the outputs of this new team, and it's really exciting to see what you can do when you put people together that historically have focused on one brand and now they're focused on the enterprise.
Well, you get to learn the lessons from all of them. Now, what you can share publicly, like how many units is Applebee's versus Fuzz, if it's public knowledge, if it's not, just say pass, of course, because I don't want to ask questions that I didn't want to get the answer to. But like how many locations does Applebee's have, IHOP, and versus Fuzzy's Tacos?
I'm going to just give you some rough.
That's what I'm talking about. Just public big numbers.
Yeah, approximately globally 3,700 units across the three business units. Approximately 3,500 of those units are domestic. IHOP is approximately a 1,700 unit brand. Applebee's is approximately a 1,600 unit brand globally. Fuzzy's 130 to 140. So that's kind of the size we're talking about. Very different profiles also within the brands.
Yeah, because Fuzzy's, you just got like 2022, right? Didn't they just come under the family in 2022?
2023, I believe. Okay. At the end of 23, we acquired Fuzzy's, and we had talked in the public markets for years. So Applebee's and IHOP came together in 2007 in an acquisition, and it brought together two, again, category leading brands. The challenge with being category leading brands is that growth is harder because you have a much larger base of stores or restaurants, and every restaurant you add on a percentage basis doesn't move the needle per se. So in the public markets, you're looking for growth, and growth is highly valued. We knew we built a strong capability at the Dine level in terms of our shared service platform with legal and finance and supply chain and now our development function. So we knew the theory again, plug in another brand to then scale your shared service capabilities. So that's what we did with Fuzzy's. We identified that the fast casual Mexican segment is growing incredibly quickly. In Texas specifically, there's a number of concepts that have successfully merged the full service bar experience with this fast casual food experience. And Fuzzy's is one of those brands. And we think has the opportunity to scale beyond its historical roots, or already has in a couple of core markets, including Colorado and Oklahoma City. And we expect that to continue as we go. So that was the thesis as we went into it was let's use the platform, let's acquire a faster growing concept, at least on a percentage basis, and use that as a platform for growth going forward. So that's where we're at with Fuzzies, and we're working to execute against it.
Yeah, there's a lot of lessons here. I mean, for those of your listeners here, because I've got listeners that are C-suite executives, franchisees, franchisors, other experts in the marketplace, and small business and small medium businesses. So even if you're not in franchising, there's a lot of lessons here as far as what does the consumer need, how to adapt, how to learn the lessons, and how to scale. And for me, I didn't know what Fuzzy's Tacos was, and then we, I got hired to come and help you guys with business development, and I knew there was a Fuzzy's Tacos close to me, so I ate there about 5 different times prior to the training that we did for you and your group, and it was interesting because the experience kept getting better every time. It was like that you could tell that when they had some new people on the staff versus experienced people on the staff, but the food was really great. And so for level setting for those listeners out here in franchising, and when it comes to restaurants, there's QSR. Some people call it fast food. They don't call it fast food, but there's QSR, which is quick serve restaurants. Then there's fast casual, which is what the word means, right? It's casual dining, but it's fast. In other words, it's not QSR, but it's not full service dining. And then you have the full service dining. So fast casual, for those people, sometimes they might not know what those terms mean. But if you've eaten at an Applebee's, I mean, that's not really fast casual. That's fast casual, and I would say full service dining, right? Would you say that, or?
Yeah, the what you're describing is the service model. And so at an IHOP or Applebee's, you're going to get full service. You are greeted by a host. You are served by a server, and that experience is what you would expect in that type of environment. In fast casual, or fast casual plus, where we live with Fuzzies, it's you order at the counter and you pick up your food and then you sit at the service model is different. So you do a little bit more work as a consumer, but it's a faster experience, and that the order is taken right away, and then the food is ultimately fired sooner. So it's a shorter dining experience. But with the full bar, we do have a lot of people that like to hang out, and that's kind of the allure of Fuzzies. You can get your food quickly, but then you can hang around for a couple of drinks. Yeah,
there were people in there that were watching basketball when I was in there and stuff. So the one right over here that we have where I live on 21st Street and Mays Road is the one that I go to. All right, so back to the dual branded development and everything. What is something that you had a plan and then you executed, but you maybe had some surprise? What is an interesting surprise, maybe positive, maybe negative, that looked good on paper, but then when you executed it, maybe didn't have, and you had to pivot?
How long's the list?
I know. And your assistant right now is probably texting me going, hey, you were supposed to send the questions in ahead of time. So full disclosure for those listeners out there, this is not a question that Scott knew he was going to get, but I'm just curious, what did you learn along the way that might have been like, because I've had 17 different companies, 3 were 8-figure, and I've had things where it looked good on paper. We did focus groups, and then all of a sudden we executed, and let's just say it didn't work.
I'd say luckily the consumer response has been, very strong. So I think a lot of what we're, focused on now is on the ops execution and on the asset itself, on the actual facility. And I could talk about the facility. I mean, we had to build this from scratch, right? We had to think about, okay, in the context of, now we did have this existing footprint in Seguin, Texas, which is an existing IHOP. So we had the 4-wall perimeter, and we had some of the existing equities that were in the space, but we then had to figure out, okay, how do you represent the brand within this, both brands within this space, and then how do you execute it on the line? And so, there's a lot of, you can put everything into a floor plan and a set of construction documents, and it looks okay when you're looking at it that way, but then when you actually build it, it doesn't always look so good. And so we're talking about very tactical things. The sight lines of the TVs. I can't tell you how many times we moved the TVs around the facility. They weren't supposed to be in certain places, but they just kept moving because there's like, well, they're there, then you can't see them from here. And then, we changed really most of the bar TV layout, while we were there within the, 2 weeks before the opening. So there was a lot of that type of work and rework. A lot of the wall decor changed. There's a few things that we missed in the plans, I think, that a consumer won't notice, but from a design perspective, we're going to adjust it and incorporate it into the next learning. And that's really what I was trying to emphasize with my team and push them as much as I could because speed was of the essence here. We're trying to get this to market. It doesn't do us a ton of good to just sit around, and talking to ourselves, planning for perfection, and then not get anywhere. So we were trying to. I don't want to say we took the 80-20, but I was trying to encourage the team that it was okay to take risks, it's okay to make mistakes. It doesn't matter how long we sit in here planning. There's going to be things that we discover when it actually launches that we didn't intend or didn't catch. So might as well get there faster and get to that point as soon as possible. So that's kind of what the process looked like. But yeah, there's a ton of, our punch list is long, right? And
Yes.
nothing that is damaging to the experience in any way. But there's always room for improvement, and we're in phase one of this long journey, we hope.
Well, it's testament to your leadership style too. Obviously, having feedback loops, setting clear expectations, but then learning as you go. So what trends, if any, are you seeing right now in restaurant franchising for business owners or potential investors that maybe they should be thinking about?
Well, look, it starts with the unit economics, I think, and it's been a challenging, macro environment in the U.S. and in most countries. I think over the last, where are we going on 2 or 3 years with inflation, right? So that kind of starts with inflation, goes to interest rates, which have increased borrowing costs. So it's more expensive than now than ever to get into this type of business. So then you've got to be really careful and thoughtful about the unit economics that you're stepping into. And so that's where you're seeing a lot of concepts try to innovate, either on the size of the box or the operating model or putting multiple brands together and trying to come up with a product that can achieve the returns that an investor or franchise investor is looking for. So ultimately as a franchisee, one is understanding what those box economics look like or projected to look like. I think that's probably the most important thing in almost any business you look at is how to make money from it. Secondarily, it's understanding who you're going to be working with. And so in the franchise system, that franchisee franchisor relationship is incredibly important, and not trying to sell my own stuff, right? But we think pretty highly of the support system we've put in place at Dine. Speaking specifically to the Dine development function, we have a fully integrated sales team, real estate team, construction team, architecture and design, and pre-opening training. So all those pieces together are meant to support franchisees throughout the life cycle. So if I'm assessing an investment opportunity, I want to understand, one, what's it going to get me? How much? It's a lot of work. Am I going to get a return out of it? And secondly, do I have a partner in this that's going to support me throughout it and at least give me the best chance for success? Those are probably the main areas, and they've just become even more important over the last 24 months in an increasingly competitive and challenging operating environment.
Yeah, I think especially it's a testament to what Dine Brands is doing. So just to recap for the listeners here, you're giving a lot of support and training to the franchisee, and a lot of franchise brands say they do that, but the success of what Dine Brands has done through your 3 sub brands is just amazing, because you're offering them to so they can focus on what they do best, but have the support that they need. And so it's really interesting there. If there was a closing thought or some leadership lesson, what have you? I'll just say it this way: has your leadership style changed over the years from maybe when you started, or were you always just a good leader and then you got better? So before you answer it, I'll just give you an example for me. So for me, I've always been strong in marketing and sales. I understand how to bridge the gap and offer value and generate leads and do conversions. But when it came to leading people, that, let's just say, I actually should hit the other button on this. What happened was I would sometimes delegate without clear expectations, and then they would miss the mark. And then I would be like, wait, what do you mean? I asked you to do X, Y, and Z. And so there was always this difference in communication. And, whenever I talk now about, culture, it's culture, leadership, management, team building, communication, and change. So there's a lot of different modalities, but I'm just curious, in your level as a chief development officer, of course, working with new franchisees and growing franchises, and then obviously for brand expansion, what's a leadership lesson, or what's something that you learned or something that you follow that has helped you along your career?
Yeah, I think it's getting comfortable with letting go of everything. It's okay. You can't be in every phone call. You can't be in every presentation. You can't make every little decision, nor should you. And so it's learning to probably trust yourself, to trust your people, to make the right decisions. And I think to what you were saying, you've got to give the right direction and set the right sets of accountabilities and responsibilities. And that comes with experience and learning by doing over time. And also, time and tenure with the people that you're working with. You trust them more after you worked with them for a while. But that's probably the biggest part where I've had to let go. I loved being in the details. I loved building and tinkering, and that's kind of my nature a little bit, is to really understand all the executional details. That probably comes from building a lot of Legos as a kid. I really like the step by step. I build every little thing, but at some point you have to let go and somebody else build it. And then you can take a look at the end and say, oh no, I think maybe you missed a step, or I think, or you say, oh, that looks fantastic. Great job. So that's the biggest piece is learning to let go and trust your people to execute.
Yeah, I think that's so good. I know for me, I turned my head because I was looking for one of my favorite books, and one of my favorite books is actually called Letting Go, because I had to learn how to hire the right people, train them to standard, hold them accountable, hire slow, fire fast, and make sure that I was using situational leadership where certain tasks needed my oversight and other tasks I could just delegate. But that I learned from the experts in this field, doing this for decades and working on platforms with speakers and having them as clients. That's when they taught me. So I think the real takeaway is being a continual learner. Would you agree?
Absolutely. If you're not learning, are you dying? You're maybe not dying, but you're stagnant. So you have to learn, you have to adapt, and it's critical.
Well, I really appreciate you being here today, Scott. Thanks so much.
Thank you, Ford. It was a pleasure.
All right, so stick around. We're right back.
Thank you for tuning in to Fordify Live. Make sure to like, comment, and share this episode on your favorite social media platform. And don't forget to subscribe to the Business Growth Show podcast, available wherever you get your podcast streaming fix. We air weekly at 11 a.m. Central Time. So until next week, keep pushing the boundaries and never stop growing.